Yeah, greetings. Let's talk about the double entry principle. It's the debit and the credit sides of every transaction. The double entry principle explains situations or scenarios where there are two sides to every transaction. There are two sides to every account. That's the debit side, which is the receiving end, and the credit side, which is the giving end. Yeah, it also talk about the golden rule. That is to say, for every debit entry, there must be a corresponding credit entry. The double entry principle explains situations where two parties are involved in every transaction, where one is receiving and the other is giving. It explains the relationship between transactions, how a receiving party is involved and how also a giving party is involved. In the double entry principle, some certain information are not overlooked. Here, two parties must agree in a particular transaction. Or we can rather say that there are two parties to this account or to this transaction, where one is receiving and the other is giving. In the other end, there must be an account. Yes. And also, either one is giving and another is receiving. That is just the significance about the double entry principle. It's an application in accounting information that explains how an account is to be prepared, bearing in mind that there are parties to these transactions, there are parties to the information. Okay? Someone must receive in an account and someone must give out. And this information has to be accounted for. That is what the double entry principle is trying to state. It's trying to explain situation where one is receiving and the other is giving. Okay, let's paint a scenario. Say we have A, we have B, where A represents Ayomide and B represents Blessing. Now, Ayomide bought uh, goods worth of say 5,000 naira from Blessing. Okay, now Ayomide has bought from Blessing. Ayomide has given Blessing some money by actually exchanging the value of goods from Blessing. So this is how we are going to have this transaction. Now, Ayomide is going to debit his account, stating what he got from Blessing. And Ayomide is also going to credit his account, explaining how money was out of his pocket. Yes, Ayomide bought from Blessing. He's going to debit it in his account that he received this item from Blessing and in exchange gave out money. Okay, that's debiting and crediting. He has received and he has also uh, given out. He received goods, of course, he gave out money worth based on the goods. Now, on Blessing's side, she's going to have two transactions as well by also having the debit side of cash received from Ayomide and of course have a credit entry or information of the goods given out to Ayomide. So that is the scenario behind the double entry principle. I hope you have understood that the double entry principle to the debit and credit side of every transaction, either one is receiving and the other is giving, so that errors will be minimized. Okay, there will be no double counting of information. There will be no confusion by both parties. Just like the bank, for instance, once an account is credited, you are already aware that yes, you have received something. There is a credit balance, okay, in your account because there is an income to you, which is a debit balance to the bank because something has gone out. Do you understand? So that is the scenario behind the double entry principle, which is debit and credit. Yeah, thanks for watching.